From one Chris to another two. No less.
Indeed.
Let's go to Chris Weston first from IG. Chris, warm welcome to you. Backdrop, of course, to today's decision, it will be flagged, the kind of the global macro story where Greece has dominated headlines. What have you been tracking the last 24 hours?
Well, I think the Greek situation was probably the big story for me, not just because of the buyback details, which we're hearing more and more of, but also the fact is, over the weekend as well, is that Angela Merkel seems more keen for the official sector, i.e. the ECB, to take part in a potential buyback or a debt write-down further down the line, which is a massive, massive carrot for Greece to try and get its fiscal position in order and try and meet the demands of trying to get a primary deficit, a primary surplus going forward. That's a huge situation. The ECB control the vast sums of the debt. 124% debt to GDP levels is what they're trying to get to by 2020. You know, some people would say that's even unsustainable at those levels as well. So the fact that Angela Merkel seems more keen to work with Greece in this situation once again shows that the Eurozone are doing whatever it takes to keep Greece in Europe. You know, last year we were seeing, or earlier in the year we were seeing Citigroup running with a line that Greece has got a 90% probability of leaving the European Monetary Union. I'd say that level is down below 5% now. There is a very low probability that Greece will leave. If you look at what's actually been happening over the last month or so, the trade of the century is taking place in my mind. You know, not just what the hedge funds did during the GFC, where they sold credit default swaps leveraged to CDOs. Now what we're seeing is a huge amount of buying of Greek debt, and they've done very, very, very well on the back of that. You know, yields, if you think back to the original net present value debt swap that agreed back in March, we're at 31%. They're now trading south of 15%. They've done very, very well indeed. So what we're hearing at the moment is the buyback's going to take place probably sometime. I think the final settlement date is going to be the 18th of December our time, about 5 o'clock in the morning is the final time. The tender is going to be done up to around about 41 cents, which is significantly higher than what the Dow Jones have been running with last week of 35 cents. So the hedge funds will like that. It's all about the participation rate. Pricing's going to be key. It's going to be done over a Dutch auction. So they want to encourage the hedge funds to take part in this, because the more people who take part, the bigger the actual debt forgiveness can be, and then Greece can try and get on with the other measures to try and get themselves in a primary surplus, which then the other carrots of lower interest rates and longer maturities kick in as well. So I think this is what was speculated last night was quite positive, with the comments from Merkel as well. I think we'll see a good participation in the buyback, and I think really what's going to happen is, while there's still problems with Greece, and clearly that's going to be evident for some time, I think Greece is going to come into the back of traders' minds, and I think that's probably going to be one of the last times we talk about it in such a negative light in the near term.
Chris, that sounds like great fun for all the hedge funds out there. But in terms of that broader risk sentiment, is this the kind of thing that's driving sentiment at the moment more broadly? Where do you see evidence of it in other markets?
Well, I mean, you're completely right. It's very difficult for retail guys to get involved in buying Greek debt. I mean, I'm sure you could probably do it over an ETF or something like that. Italian debt's been very, very strong as well. Retailers can take part of that. We offer, BTPs as well. But I think what's been very interesting is just the way the euro-dollar's been trading at the moment on the back of this. I mean, for so long we've seen euro-dollar trading on risk-off sentiment. If the S&P goes, S&P futures during our time goes, then again euro-dollar will trade with that. There's been a very high correlation. What we're actually seeing is that correlation breaking down, and euro-dollar's trading more on interest rate differentials, yield differentials, as opposed to that pure risk-on, risk-off thematic. It's looking really, really strong at the moment, euro against other crosses like the Aussie, but against the dollar and against the yen, it looks really nice. We saw the actual May 2011 downtrend being broken last night in euro dollar, and I think a lot of it has to do with the peripheral spreads that are coming in. Italian yields, the lowest now since I think 2010. Spanish yields are coming off quite sharply, and they've got to be thinking to themselves at the Tesoro in Spain, they've got to be saying that all these concessions have been given to Greece. What are they going to do for us? We could potentially take a little bit more from these guys in the short term. We'll hold off a little bit more because we know they are buckling to do whatever it takes to get in the euro. So euro dollar, just the way that the thematics are moving at the moment, I think is very, very interesting. And obviously retailers can take part in that by being long euro dollars on dips with those closing peripheral spreads at the moment.
All right, beyond all of that, closing out of short positions, you were saying to us in the last hour, unless you are a serial gambler, to kind of paraphrase, you're not going to be in that trade at this point in time. Good luck to you if you are. and may you profit nicely. But what are you telling your clients specifically, those who are kind of a little bit more, I suppose, hedging of bets minded?
Well, I think the people if you take a longer-term view in 2013, I think the views of a lot of investment banks and strategists, and also part of my own is that the view on terms of trade and the potential impacts that's going to have on capex, and what we're already seeing with the peak in capex, could be a really fundamentally strong story for the Australian dollar to the downside, especially if we see unemployment peaking or unemployment rates ticking up, and we'll get a read on that on Thursday. So I think there could be, the RBA could have to do a lot of heavy lifting. If you look at some where people are calling rates next year, some people are calling, I think Macquarie are calling 2%, which I think I wouldn't personally agree with myself, but I think that you could see as low as 2.5% if we do see those capex numbers really coming off. And I think February 24th will be a key date then, when we get Q4 capex, which will give us 12-month guidance on the back of that. So I think stay clear of the RBA announcement. I think there could be some really good upside today. One, if they keep rates on hold, that's obvious. But if they cut rates, but they give a reasonably neutral statement, which, if you look at the last statement, was actually quite upbeat in parts. I think we could see at the margin a slightly higher Australian dollar. So very, very difficult to read in those terms how to trade on the back of that. But I think there will be weakness in the Australian dollar over the longer term. And I think looking at the statement, disseminating the statement, dissecting all the words and the rhetoric about what they're seeing is going to be the clearer trade, because at 2:30 we're going to see a bit of volatility. But I think what will happen, depending on the statement, if we get a dovish statement that and a 25 basis point cut, we'll get that nice trend that won't just be a one-stop move. We'll see that trade right into Europe and then through the US as well. And we're probably likely to see the Aussie coming off quite nicely against the crosses as well. So I think see the statement, get an idea about what the RBA are thinking at the moment, and then try and position yourself around that. I think it's probably the better way I'd be looking at this right now.
Chris, broader market looks a bit lacklustre. Overall, we're down 0.1%. Stock moves of interest at the open, though. What's caught your eye?
Yeah, I think GrainCorp's the interesting one at the moment. We saw Stockland. They're down about 0.5%. As we'd expected with Stockland, the near-term downside is that the bottom end of the range that they've speculated is certainly below where the market had been positioned, hence why the stock's down at the moment. But as I said earlier, this is a turnaround story for Stockland, and I think people aren't really panicking too much, because there is going to be EPS growth through 2014, 2015. So I think people are looking to buy the dips in this name at the moment. But GrainCorp is probably the interesting one at the moment, given the corporate activity. They've taken this to ADM, have taken this to 12.20. There's a special dividend which has been previously announced of 35 cents, which takes the full bid up to about 12.55, I think. And the stock's trading just south of that at the moment. I think GrainCorp's trading at 12.32. So look, this has been widely expected by the market. We've obviously seen the stock trading at a premium. What's the interesting side of things now is exactly what ADM do. They're going to have to see how the board position themselves around this bid. They potentially could go hostile if the board doesn't give them the thumbs up. Again, what happens after that is anyone's knows, because we know that FIRB have got to get involved. I think FIRB should, in theory, give the deal a green light. Remember, AWB and ABB were both taken by foreign firms, and they were both given the green light. So in theory, that should work. We know that MOFCOM, the Chinese regulator, may have to come in it, because GrainCorp have bought some Chinese ports. They've got Chinese assets, so they may have to come into the mix as well. So this promises to be a long and drawn-out affair. Hence why the people who are in this like the special situation hedge funds probably will lose patience and probably come out of the stock at the moment. But I think there potentially could be more upside. I saw a note this morning from RBS Morgans, who said the deal could be worth as much as $14. I mean, if you look at the multiples on this, it's done around about 8.7 times forward EBITDA, which is below, if you remember, Agrium taking over AWB at around 9.5 times. So that's why I think you could probably see a higher offer being held out. But at the moment, people are still trading this at a bit of a discount, and it's still got to clear a lot of different hurdles, which I think in theory should go through.
All right, and that stock is up over 3% to 12.32 as we speak. Thank you so much. Talk soon.
Thanks. Yeah.
It is tipped now that concerns when it comes to